Hi, welcome to the channel. Today, I will share about the structure, settlement, and the power of the annuities. And don't forget to like, comment, and subscribe. Okay, let's start. The structure settlement is a type of financial settlement usually awarded to the victim of a personal injury incident. For example, assume a juror award the victim damage in the sum of $4 million depending on the circumstances. The damage may be awarded as structured settlement rather than a lump sum. The settlement is called structure because the initial award, like $4 million in this example, is divided up into equal payments that are paid to the victim as previously defined time interval. If the statement is structured to pay the victim $1,100 of the years, the period of the settlement is 40 years. Therefore, the victim will receive a payment of $1,100 each year for the next 40 years. The total amount of the cash received by the victim will be 40 years is $1,100 per year, which equal the original award amount of $4 million. Many people think the paying party has to put $4 million into a bank account set up for the victim. They also think that $1,100 will be withdrawn from the bank account each year and paid to the victim. At the end of the 40 years, the victim's special account will be empty and the victim will have received the full amount of the award. That one way of the setting up the structured settlement. From the point of view of the paying party, there is a less costly financial tool for setting a structured settlement. That tool is called an annuity. An annuity is a large sum of money set up to pay the recipient a fixed amount of money at a regularly defined time interval. But wait, you might say, that's same as putting $4 million in the bank account and paying it out over the 40 years period. That's almost true. The power of an annuity comes from the fact that I can be set up by depositing a much lesser amount into an interest-bearing or interest-earning account. Before continue, you need to remembering this important point. The court ordered the paying party to pay the victim $1,100 a year for 40 years. The paying party is not required to submit a lump sum of $4 million to be paid over the 40 years period. As long as the paying party pay the victim the specified amount at the specified time intervals, they are in full compliance with the law. U.S. law specifies that annuities can only be set up by independent, neutral third-party insurance company. To set up the structured settlement, the paying party doesn't have to submit a lump sum the insurance company to be put into interest-earning account. But the power of annuities allow the paying party submit a lump sum that is much smaller than that total reward. For example, if the structured settlement account consistently earn 5% interest per year, that paying party only need to invest a one-time sum of $2 million. Each year, the $2 million will earn 5% interest. At the end of each year, the account total will be $2,100. The next is $1,100 will be paid to the victim, leaving the original $2 million in the account. And then, if the paying party can find account to pay 10% interest, it will only have to invest a one-time sum of $1 million at 10% annual interest. A sum of 1 million make 1,100 per year, which will be paid to the victim. At the 15% interest, the paying party will be a one-time investment of $100 in order to pay the victim the required $1,100 per year. As you can see, the more interest a structured settlement account earns, the smaller the sum the paying party has to invest in order to create the annual payment to the victim. The above example use simple interest to avoid the complicated of the real-world finance. However, the principle of the annuity were the same. If it seems that paying party is getting off easy, consider this point. First, the paying party is paying the price of large chunks of money for 40 years. Second, they are complying with the terms of the structured settlement. And the third, if your company was required to make this payment, wouldn't you do it the most economical way possible? The research below has more free information about how structural settlement works. Okay, thank you.